I'm pleased to say that today the market has endorsed the government's view. That was that it was a correct decision to take, and that we finished trading at about the rate we were trading at in the middle of last week.
Well, that was Treasurer Paul Keating at the end of the first day of unfettered trading in the Australian dollar, December the 12th, 1983. And it was high fives all round, although it was never going to be allowed to crash that day. It started sinking 2 months later, actually. Now, here's a chart of the exchange rate from 1971. From 1976 to the day of the float, it was set through what was called a crawling peg, to the US dollar that is, set by a committee of Cabinet on the advice of the Governor of the Reserve Bank, the Treasury Secretary and the Head of Prime Minister and Cabinet, aka the Troika. It hit the all-time low in March 2001, and then 9 months later China joined the World Trade Organisation and commodity prices started flying, which pushed the Aussie to a peak of $1.10 in July 2011. The current price is about 10 cents below the post-float average of 75.5 US cents. Today the dollar celebrated 40 years of freedom by going for a quick trot to 65.9 US cents. Commodity prices mostly fell, but not much. Global markets mostly rose, also not much. And the local market went up 0.5%, with falls by some big miners more than offset by gains by banks and retailers. Reserve Bank Governor Michelle Bullock gave a speech today containing this graph of the decline in the use of cash. She said that distributing it is becoming uneconomic, so those who use banknotes and coins might need to bear more of the costs. Well, that should hasten the demise of cash, and that's finance.